Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours, and in this case, the weekend. Today is Friday, February 10th, and we are heading into the weekend prior to CPI on Tuesday. So, going into CPI, typically we will see, a little bit of consolidation and then some price action leading up into CPI, potentially bullish or bearish, depending on how the market perceives it. There are a few warning signals for CPI. Used car prices are up close to 10%, not double digits, but high single digits. Which is definitely a worry. Of course, food and energy costs, are subtracted from core CPI. So no immediate worry there, but used car prices going up is definitely a proxy for the rest of other goods and services increasing as well. So there is certainly the way that CPI may not be positive, or in this case, CPI may not be a beat on Tuesday, which would be a miss, which would be bearish for risk assets. So something to consider. We're looking at DXY right now, as you can see by the prediction lines that I gave the GTC community this morning. We are obviously above the range high and moving into or higher, attacking the 104 area. So obviously this could reverse back to the previous daily close or the 200 estimated moving average, but DXY certainly looking strong. I would not look to fade this just yet, especially heading into CPI. CPI would be the best time to fade the dollar, but obviously if CPI ends up in a negative way, meaning it's increasing, then you will likely see the dollar head higher and risk assets head lower. So something to continue to watch. We are breaking above resistance, and I would not fade this, meaning it does not look very positive for risk assets in the short term. But of course, we are down so much that shorting as well at this level may not be the best decision. We could see some consolidation. We could see a little squeeze to scare some shorts. This is certainly precarious sledding, if you are choosing to partake in the market. So right now, previous daily close at 40.85 is the resistance. We obviously have resistance at 4100 as well. So if you can get above that, then resistance at 4100, you have to break through that to get it back up to the previous range. Rejected at 40.85, then you're, probably ranging between 40.40 and 40.85. Obviously, it's trying to catch at the mid range right now, which is 40.60, 80, 40.68, 40.70, something like that. But I would bet that more likely than not, we just form some sort of range right here if we're not, just sliding down ever so slowly. So not bullish on equities right now, especially with the way that the dollar's looking. Of course, the dollar completely reverses back here, then maybe we see equities jump up to 4100, but I'm not sure long is the best way to play at this level. And if you're not if you don't want to take a huge bet, we're likely to consolidate or trickle lower, in my opinion. So looking at Bitcoin, very similar outlook compared to what we just discussed with equities. I'll kind of do this to make it a little bit more clear. So dropped yesterday, consolidated into this morning, tweezer top right after the US Open, and then sliding down. So supports at 21.3 should be a nice catch to start. Remember, it's the top of the range that we traded previously. And then, of course, if 21.3 breaks, then we're probably sliding lower to the low end of the range around 20.4. But just given the move, given the recent volatility, given that CPI is on Tuesday and we're heading into a weekend, I would expect, potential catch around 21.3 for potential consolidation back up towards the previous daily close. Or maybe we just catch here, jump back up to the range around 21.9, 22, and then that's the range that we head into until CPI. If you look at it, Fridays here to Tuesdays here, not a whole lot of hours to trade. And if you really think about it, drop here, jump here, consolidate, into Tuesday, not the craziest idea. We could, of course, jump up here, get rejected, come down here, then come up here for CPI, then before another move. So it's another possibility as well. But my current outlook is slide down a little bit, play it very technical, catch its support, consolidates a little bit, and then either move a little bit higher and get rejected lower, or just start to continually trickle lower into next week. So very similar outlook for Ethereum. No, I guess we'll check out ETH BTC, which has broken down, unfortunately. So that is a bit of a sad look right there. We definitely, had a bullish trajectory, but now it looks like ETH is going to be more weak than Bitcoin. So something to watch out for if you are shorting and looking for high beta plays. We all know that alts are definitely high beta compared to Bitcoin, but many other, obscure 50, 100 million cap alts are very high beta to Ethereum. So worth understanding that and noting that if you are looking to be active this weekend. So very similar to Bitcoin, 1500 is that area in comparison to 21.3. So 21.3 for Bitcoin, 1500 for Ethereum. Potentially slide down, tag that, jump back up to the previous daily close, maybe a little bit higher, and then we continue, a similar volatile pattern heading into CPI, potentially also drifting lower. If 1500 breaks, then 1430 is looking good. So if I really was a betting man, I'd say that we would form some sort of catch around this area, jump back up to the previous range that we traded in yesterday, maybe try and, throw a couple of wicks up here, where we had some previous wicks. This is technically now a fair value gap. So you could potentially jump as high as 1600 and get rejected there and still end up on a bearish trajectory. If you kind of look at this trend right here, if price action were to do this, you're still on a bearish trend, although, that's some pretty nasty volatility and would shake out a lot of shorts. So, again, CPI is Tuesday. We're very oversold. We're nearing support levels. I'm not bullish. I'm not expecting prices to jump out of their skin and break on a bullish trajectory, but not a bad catch area for potential swing long, and then catch a swing shorts on the potential rejection where it's confluence with both the trend as well as previous resistance. And then we could also move this down as well to something like this, where now you can see that rejection may come, this evening, that we may not even make it up to 1600, a couple of wicks, touch that cloud, and then get rejected down. So I would pay very close attention to these bearish trends right here. So these two, I think, would be good. If you are looking to get long around the lows and around support, then your long should likely be cut around, either 22.3 or coinciding with this bearish trend. So that's my current outlook, and I think that you'll be rewarded for definitely being a little bit patient going into CPI. But if you wanted to make a little bit of a zealous play, or fading all of the shorts that are stacking up right now, that's your swing kind of long into the weekend, and then there's your rejection point once it gets tagged. So not looking very positive. We obviously had the SEC news yesterday in relation to Kraken. Looks like stable coins like Circle and such and Paxos are getting looked at. Allegedly, there's more rumors of regulation and regulators coming down with the hammer. So we could see more of this type of news. And of course, equities don't look very positive. So the general outlook would be that crypto and risk are moving down, especially, we have our own news on crypto, which is bearish. And then if equities are have to succumb to potential, further Fed tightening or a bearish outlook by traders, then that's going to be further exacerbated in the crypto market. So it's something to look out for, in reasons that I'm not entirely bearish right now, but every time we see volatility to the downside, we're going to see a little bit of volatility to the upside. We're not just going to head straight down. We don't have an FTX, 3AC, Celsius, Voyager debacle like we had in the spring. So it's going to be a little bit more tougher trading than we had, during that down only. And Eric, good question. Alex is, he's not technically on leave. He's still working, but obviously we have some things going on with Cent Galaxy and VGX. So he's been taking a leave of absence from video and front-facing media while we handle that. But he's certainly working, grinding, and he is not on leave by any stretch of the word in terms of what it means for Trade the Chain. So good question there, and thanks for asking. You'll definitely be seeing Alex in the near future. We're going to be doing a few more guest shows and things like that. So you've heard my analysis, not bullish, but swing longs may come into play soon. Would look to short them on retests of the bearish trend. And CPI on Tuesday is really going to be where all the fireworks are. So if you wanted to take a break for 3-4 days, now is your chance after we just had a beautiful January. So good luck, happy trading, and speak to everybody soon.